Let's have a quick conversation about business loan refinancing and when to do it and how to actually do it, let's say affordably and promptly, okay? Let me give you a few generalities here. So when we think about business loan refinancing, we're talking about actually saving money. Saving money on the APR, saving money on what kind of modalities you have to go through or what you have to comply with. So you're trying to really save money, which means what? You are trying to go from scenario A to scenario B, and hopefully scenario B will be more advantageous to your small business, okay? So refinancing a business loan involves applying for a new loan from the same or a different lender to pay off your existing debt, okay? And you can refinance from the same lender. As long as the lender is okay with that, that's totally fine. Usually, lenders don't want you to refinance with them, but there are cases where they might work with you, okay? So basically, the goal of refinancing here is to actually save your business money and streamline cash flow. You're trying to really make, like, if you, for instance, if you are paying your business loan once a month, basically, if you can refinance with a lender who will accept you paying once a quarter or once every 2 months, that's totally fine, okay? So refinancing a loan means that you're getting a new loan to actually pay off an old debt. So your old debt, there has to be a condition that allows you to do that, okay? And also when it comes to a refinancing, business loan refinancing, you can actually consolidate not just one business loan, but several business loans. For instance, if you have, let's say, an equipment loan, you have a term loan, you have a business line of credit that you have tapped into, and you are trying to really save money, you can actually get a single loan, a single business loan to refinance all those debts, to consolidate all those debts, okay? So one thing you need to understand is that when we talk about actually getting better conditions, it's not just about the APR. I've said this before. It's also about the modalities, okay? And one thing you need to also understand is that you can refinance all kinds of business loans as long as the lender is okay with it. As a matter of fact, you can even refinance an SBA loan. Okay, that's totally fine. It might take a little longer for approval, but you can certainly refinance an SBA loan. So when it comes to a business loan refinancing, let me give you the steps you need to really follow this year. One thing you need to understand here is that you want to gather your loan details. I'm speaking about the loan you want to refinance. If it's one loan, okay. If it's 2 loans or 3 business loans, you need to gather for each business loan the details that actually apply to it, okay? Every business loan is different. You want to go back maybe and read the fine print. You want to read the clauses of the business loan contract that you signed when you actually got the funds, okay? And the reason why I'm saying this is because maybe the lender doesn't approve a refinancing process. Maybe the lender actually has some fees because there could be some fees associated with the refinancing. Okay, for instance, there are some business loan clauses that actually call for an early payoff fee. Okay, so if, for instance, your business loan actually asks you to repay the loan over 5 years and you want to refinance after 1 year, you're actually making the lender lose money, right? Your initial lender. So some lenders might have some fees in case you actually discontinue the business loan process. So when I say key details, when I say you want to gather your loan details, I'm speaking about having details about the type of loan. For instance, is it a secured or unsecured loan? Who is the lender? Since when have you had the loan? Okay. Also, do you have, are we talking about a line of credit or a term loan? Or like I said a little earlier, a merchant cash advance or equipment financing, whatever it is. You want to also gather details about the outstanding balance, because if you are refinancing a business loan, if you're refinancing the loan, that means you're refinancing only the outstanding balance. So you need to have a clear idea about what that balance is. Same thing for interest rate. Make sure that you understand the interest rate that you are paying, the monthly payment itself, the number of payments remaining, and the total amount you will pay over the remaining life of the loan. That way you can make a specific decision, let's say an appropriate decision, as to whether or not the refinancing product is actually beneficial to your business. Okay, so your outstanding loan balance, how much time is left in the loan term, your loan payment schedule, including the payment amount, your current interest rates. Those should be really important for you in terms of possibilities for refinancing. Okay, so several types of business loans can be refinanced, including business term loans, lines of credit, working capital loans, commercial real estate loans. Okay, short-term business loans also. So if you are thinking about business loan refinancing, once you actually gather your loan details, you need to think about your goals. What are your goals? You need to determine your goals, because your goals are going to help you guide your actions. You might consider refinancing a loan for a few reasons, but the two most common ones are: number one, to lower the loan's interest rate, and number two, reduce the loan's monthly payment, right? Because everything has to be tied to your cash flow, has to be tied to your current financial situation. So if you want to refinance because you are able to get a lower APR, go for it. Okay, as long as your existing lender is not charging you, let's say, an early payoff fee or something, some kind of fee, you are good to go. And as long as the new lender also doesn't have some crazy clauses, like that could be really bad for your business. So because once you refinance, your previous loan is paid off and replaced with a new loan, right? It typically makes the most sense to refinance only when you are replacing old loan terms with more favorable ones. Okay, so it's important to really determine your goals and know exactly that the whole process of refinance is actually advantageous to you. You have to really set your refinancing goal. You have to be clear in your mind what kind of goal you are going after. Do you want to lower your monthly payments? Do you want to make payments less frequently? Right now, maybe you're paying once a month and you want to switch to a quarterly payment process. Okay. Are you trying to lower the overall cost of your debt? Okay. So the bottom line is, you will see, and it's just better to put things in an Excel spreadsheet. If you have a question around that process, let me know in the comment section, and I can really answer you, because every company is different. Your business model is different. Your cash flow is different. Your current loan is different. So if you want me to give you a proper advice, let me know in the comment section, and I'll certainly get back to you real fast. So if you want to refinance a business loan, everything has to also has to revolve around the conditions that the lender who is refinancing your loan actually has put in place. Okay, and your credit, and also your eligibility are two important factors that the new lender is going to look at. Okay, so you want to make sure that you have the best. You're getting the best shot possible when it comes to your credit profile, because you are replacing your old loans with new loans, right? So the new lender also has to understand that you are a good credit risk for them. So when it comes to checking your credit and eligibility, you want to look at your personal and business credit score. So your personal credit score, your FICO score at TransUnion, Equifax, and Experian, right? You want to make sure there's no gap between those three credit rating agencies. Like, you don't want, for instance, TransUnion to show your credit score as 700 and Experian showing you a 725 and Equifax showing 800. No, you do not want to see that gap, okay? Because that gap could be a reflection of underlying problems, okay, or errors, okay? You also want to look at, so besides your personal credit score, look at your business credit score. I'm speaking about your Dun & Bradstreet score, your Experian business credit score, and also your Equifax business credit score. I mean, there are some cases where you might want to check your SBSS scores too, okay? And so besides that, you also want to look at your debt to income ratio, your DTI ratio. the lower the better. When it comes to DTI, the lower the better. Usually, experts will tell you to stick to something at 30% or below 30%. So if your DTI is 30% or less, you are good to go. Okay. So you want to really, but I say it's always better to have 25% or 20%. The lower, the better. And you also want to look at your business's revenue and profit, because those are going to be instrumental in getting you the best deal possible when it comes to a business loan refinancing. Okay. So you want to gather your paperwork. So when it comes to a business loan refinancing, you need to understand that generally eligibility for a refinancing debt isn't different from getting a new loan, a new business loan, right? Because lenders actually are looking at the same criteria. They're asking you for the same paperwork. When I say paperwork, it can be a lot, or it can be very brief. It can be very short. Like the process can be very fast, depending on the lender. Some lenders don't care much about, I would say, paperwork, while others care a lot. So if you think about, if you go to a business, if you want to refinance your business loan and you go to a bank or a credit union, for instance, they might ask you to gather extensive paperwork. But if you go to an alternative lender, if you go to an online lender, if you go to a fintech lender, if you go to a specialized lender like an industry lender, you might not need to provide as much documentation. Why? Because those lenders are using other ways to assess your credit risk. Okay. But one thing for sure, when I say gathering paperwork, I'm speaking about business financial documents such as profit and loss statements, balance sheets, cash flow statements, accounts payable and receivable reports, so they can see the gap between your cash inflows and cash outflows, your payroll records, your commercial lease, among other things. Okay. The more extensive, the more comprehensive your paperwork, the better, because you're giving lenders everything they need to have before making the decision about approving your business loan refinancing process. You also have to have your EIN, your business tax ID number. That's another name for the EIN. So EIN stands for your employer identification number, and you usually get this from the IRS. It's a very fast process. 10 minutes, you get your EIN, not a problem. Or you can actually get the EIN through, you can get it manually by filling out a form called SS4. But the process for approving your EIN, if you file it manually, is actually longer. So whereas you're getting your EIN very fast within 10 minutes when applying online, if you apply through the SS4 form, it might take weeks before the IRS can get back to you. Okay. You also want to have your bank statements, your business licenses. So every niche is different. Every economic sector is different. So your economic sector is totally different. Okay. And so you also want to have a business, like a proof of collateral. That's an important element. Proof of collateral for secured loans. If you want to refinance, you want to refinance a loan and it is actually asking for a secure loan. You also want to have a disclosure of any other debts that you might have, any relevant contracts or ownership agreements. Okay, this is an important element to have in mind. And so you also have to provide personal identification documents such as a driver's license. Okay, and you want to gather those documents before applying to keep the application process running smoothly. So the process here is pretty simple. The more prepared you are, the better, the faster the process can be. So when it comes to a business loan refinancing, you want to compare loan options. See, the whole thing is that you do now, remember, I told you that when you refinance a business loan or a personal loan for that matter, you are trying to save money when it comes to the APR or when it comes to the loan repayment frequency, right? So you got to really have a system in place when you compare loan options before actually deciding to ditch your existing lender. So you want to look at things like interest rates, origination, and other fees. Well, when I say other fees, I'm speaking about early payoff fees, or sometimes you might also have application fees. So when you are refinancing a business loan, you got to really pay attention to those ancillary fees that actually in the end increase the cost. Because if you know, remember when you refinance a business loan, I think I said this before, but I want to repeat it. You are trying to save money. So don't just do a debt consolidation process and end up paying way more than you were paying before. You want to look at the term options. So here I'm speaking about the repayment window. Are you refinancing to actually to make monthly payments over 5 years, over 10 years, over 7 years, or that, like, if things are different, you have to really analyze that. So when you compare loan options, you want to look at those metrics. You want to look at the minimum and maximum loan amounts, and also the collateral requirements for, let's say, for some loans. Okay, so it's also a good idea to reach out to your existing lender to find out what loan options it may offer. Because see, the thing is, before going to a new lender, try the existing one. Maybe you'll be really surprised that the lender will be pretty comfortable to make a tweak in your current loan program to actually accommodate you. So if you have to do that, it's just always way better to work with your existing lender than actually go to a new one. Okay, if your existing lender can really accommodate you and give you satisfying terms and conditions, I would say 100% always stick with them. Okay. And so when I say research and compare lenders, you have to think about banks, SBA lenders, online lenders, alternative lenders. So you have thousands and thousands of lenders out there that can really help you out. So when it comes to a business loan refinancing, you finally have to submit an application. So when you gather your loan details, determine your goals, check your credit and eligibility, gather the paperwork, compare loan options, you have to finally take action, right, by submitting your application. So you can submit the application online or at a branch. If you are working with a bank or a credit union, you can actually submit the application at a branch, or you can also submit the application via email. There are some lenders, particularly alternative lenders and online lenders, that are comfortable actually if you submit paperwork on a specific platform or via email. Of course, the email has to be secured, okay? One thing you want to do is when it comes to refinancing your business loans, I want you to really prioritize soft pulls. You want to get multiple offers and compare loan costs carefully. You want to go through loans that are pre-qualifying you. So you have soft pulls, not hard pulls. Don't overlook the cost of prepayment penalties for your current loan, right? Like I said, prepayment or early payoff, those mean the same thing. And also avoid running up new debt once you have refinanced, okay? Let me give you a few extras here. When it comes to refinancing your business loan, you want to do this if you have somehow strengthened your loan qualifications. Your existing loan becomes very expensive for your budget. Okay, in other words, the cash implications about the existing loans are pretty high. You have the potential to save money, right? Those are scenarios where you want to really pursue a business loan refinancing process. On the other hand, there are some instances, some scenarios where you might think twice or even 3 times before refinancing. So if you are struggling to make your current loan payment, or you won't actually save money, why would you actually go through the whole process of refinancing? Because you'll be just wasting your time and money and other resources. So don't do it. So here's the epilogue to today's conversation. In terms of business loan refinancing, I give you the generalities, the steps you need to follow, the extras you need to be aware of, and finally, the epilogue. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.